Hello smart money traders, welcome back. Here in this video we're going to quickly do a top-down analysis on the dollar index to determine the weekly directional bias of the dollar. This is important because the dollar is the benchmark asset for all foreign currencies and other indices. Now what we do is that if we find out that the dollar is having a bullish week, then we expect foreign currencies to have a bearish week. They have an indirect relationship, and indices where you're trading futures, you are going to still need this analysis every week. Today is Sunday, tomorrow is Monday. The foreign exchange market will be open tomorrow, and we need to know exactly what may be unfolding over the week. And the dollar index is basically an indices that has a direct relationship with the United States dollar. It measures the strength and the performance of the United States dollar. So we're going to start from the monthly time frame down to the lowest time frame we can find, and then we're going to check maybe GBPUSD and correlate them and see what may be unfolding for the week. So we will start from the monthly and know exactly what is happening. We're not going to touch too much data. We're going to basically focus on the most recent data right here. So from here you can see on the monthly, price have traded from this level to this area, and then we've seen price pushing down from here to this area. What we saw at this point was basically an all-time mitigation block. From here, price actually traded into this bearish mitigation block, and then price has started coming down. For almost 6 months we've seen price being bearish. So what we want to focus on right here is to basically focus on the most recent data right here. Now what we do when we see such kind of price swing from here to here is to look at where exactly this retracement is. Is it at a premium or a discount? And that is basically to pick your Fibonacci tool and measure from this swing low to this area, this swing high, and look at where price is at currently. The middle of this Fibonacci tool is called your equilibrium. Above it is your premium, below it is your discount, and then you're going to look at where price is at currently. Now price have actually traded into a discount area, and then right at the discount area we have something called a fair value gap right here. Can you see this fair value gap? Price have actually traded into this fair value gap, and that's an institutional reference point, and we've seen reaction right here just after price have traded into this fair value gap right here. Let me show you. As price touched this fair value gap, and then we have this equal lows, liquidity residing below here. Price picked the liquidity inside this fair value gap and is pushing up to this level. Price actually traded into this volume imbalance right here. I'm not going to explain some of these terms, but basically volume imbalance is when you see price action that involves only the wicks of the candle, not the body. Normally the body should be connected just like this, you can see, but when you see a gap in between the body and only the wicks are connected, it is called a volume imbalance. Price actually traded into it and then pushed down for almost 2 months, 2 months, and then price came just below this area and grabbed liquidity below here. Just below here, a small grab in liquidity, and then we are seeing a bullish reaction for the whole of this month. What we are targeting from here is basically above these equal highs, these two equal highs. We want to see price trade above it, because right above it we have this fair value gap right here, this particular fair value gap at this point, and then this bearish order block is also very important for us to look at as our institutional reference point. But we're going to focus majorly on the middle of this fair value gap, which is called consequent encouragement. When we have a very big fair value gap like this, we expect price to basically trade to the middle and start coming down, and once price reaches that place, we want to see price reach down to this bullish mitigation block at this level. So this is what we are looking at from the monthly. We are still bullish on the monthly, and then we're going to drop down to the weekly time frame and see what is happening in the weekly time frame. Right here is the weekly time frame that we have, and let me just delete everything so you can see. Just like the monthly time frame, we've seen price actually traded below these relative equal lows and then grab liquidity just right here. At this point we've seen a grab of liquidity, push above here, even above this high, and then we've seen price reacting down to this level, grabbing liquidity below this level again. And where we are right now is that price is pricing into an internal range liquidity, because price always move in this direction, pick an external range liquidity, and then heading back to an internal range liquidity, which is this particular fair value gap that I'm seeing. Price is trying to reach out to this particular fair value gap according to what I'm seeing. And then right here we can see a bearish order block, this one. So price is really reaching out to that area, and then we may eventually see some kind of reaction from here to the downside and eventually reached out to that monthly mitigation block I actually showed you, or to basically reached out to this level. Let me show you what I'm seeing right here. Right just below here we have this this particular fair value gap with this bullish order block right here. So we're looking at it from that place. So for the meantime, we are bullish on the weekly, and then we are bullish on the monthly. So this is what we are expecting price to push to this area. If we see a price open above, if we gap below, we're going to expect a bullish movement. If we gap above, we will have some reaction to fill in the vacuum block before we see price move up. So we still maintain our bias as bullish on the monthly and then bullish on the weekly. Now we drop down to the daily time frame and look at what is happening on the daily time frame and know exactly what to expect for the week. So the same thing happening on the daily time frame. A graph of liquidity right below here. We have this little graph of liquidity. Price is currently above this level. We have broken structure right here. Right at this point, there is a break of structure, which we can all see. So after that break of structure, price have actually traded above, grabbing liquidity above this all-time high, old high, and then reaching into this fair value gap right here. Can you see this fair value gap? We may expect some reaction on the daily time frame in this particular fair value gap, and then right there we expect price to probably push down. Okay, from here retrace back into this particular bullish order block, and then this bullish order block has a fair value gap right close to it. Okay, but what I'm expecting is to see, let me just measure the price swing from here to this place. Okay, even though this order block is still at premium, it's not as strong as I expect it to be. That means we're going to target this place, this particular place. Anytime you see an order block, if you're expecting a bearish move, an order block in premium should not be a very strong order block to me. And then we are going to focus on this fair value gap and then this particular bullish order block as our target, as DXY is repricing into an internal range liquidity, which is at this area. Okay, because we have grabbed almost all the external range liquidity, and then this is a bearish mitigation block, a confluence of this fair value gap and a bearish mitigation block at this point. So what I'm seeing is to see some kind of reaction on the daily into this area and then move up. So in the daily time frame, I think we're going to have a bearish week on the dollar, except if something happen otherwise. We're going to force our opinion over our charts. We want to see what the price does by itself. So this is what I'm seeing, dropping down to the 4-hour time frame, or let's go to the 1-hour time frame and see what we've got in the 1-hour time frame. Let me delete everything and have a very clear chart. So this is the 1-hour time frame, guys. Look at it. This is what we are seeing. Okay, price is actually bearish from the 1-hour time frame. We have a break of structure right here. Okay, so this is what I'm seeing, break of structure right at that point. Price is retracing into this area, trying to reach down to that level. Okay, so that is why I was looking at the daily time frame as a bearish market, because price has just came to this area, had this movement, and then filling up this very big imbalance, this particular fair value gap. Let me just mark it like that, this imbalance. So from the 1 hour, we're seeing something like this, maybe to grab liquidity right below this area, below these relative equal lows, then reach down to this fair value gap before we have some kind of reaction above for the DXY. So this is what I'm seeing happening for the week. And then if it happens otherwise, it means we are just looking at price behaving the way it should behave. And then don't forget, guys, you should always use your Forex Factory to check what economic news you have for the week. To get that, it is basically easy. Just go to forexfactory.com and then come to where you see calendar, click on it, and then you're going to see all the economic news that you're expecting for the week. You're going to basically focus on all the high impact news that has to do with the United States dollar. And if you want to filter out, simply come to this place where you see filter, take out this low impact news and focus on the high impact impact and medium impact news and apply filter, and then you're going to get all the high impact news on the dollar for the week, and then you're going to focus on it for those days. Okay, these are the things you're going to focus on, such as FOMC, CPIs, and then non-farm payroll. These are very important economic news you want to focus on. So let's quickly look at GBPUSD and know exactly what may unfold for the week, just like we've done for the DXY, that is the benchmark asset, for determining what exactly we're expecting. So let's drop down to the monthly time frame on GBPUSD, which is very important for us. So looking at this from the monthly time frame, we're going to look at it from this perspective. So price is bearish from here, and then we had this very huge break of structure at this point, a very clear break of structure, and price actually retraced into this fair value gap just right here. This fair value gap, can you see? And this fair value gap actually coincides with this bearish breaker block. Okay, this bearish breaker block, and price actually traded into it, and we are seeing a bearish movement from the monthly time frame. And then right below here we are seeing this fair value gap too, which we expect price to come confluencing with this bullish order block. Now we drop down to the weekly time frame, since we are just going to focus on the weekly trading window. Okay, so what we are seeing right here from the most recent price swing from here to this level. Okay, most recent price swing from here to this level, we can see a volume imbalance just at this level. Let me show you the volume imbalance that price may eventually reach out to, and I'm having the feeling that this volume imbalance is where price is reaching down to in this bearish movement. And ultimately, if we are to expect a bullish, short-term bullish movement on the weekly, we want to see price come here. And then for the meantime, we are ultimately bearish on the GBPUSD, because the dollar on the weekly is actually bullish. That means the GBPUSD will be bearish. They have an inverse relationship. Okay, now we go down to the daily time frame and see what is happening on the daily time frame, and then we're going to know exactly what to expect for the week. So this is what is happening on the daily time frame. Price has just been moving from here. This is a change in direction, market structure shift from this level. Okay, a market structure shift just happened from this area, and then we're bearish from here. Price is just behaving at that point, looking at all this liquidity residing below here. So these are where the draw on liquidity will happen, all this area. Okay, as we have a bearish movement, we're going to see price taking out liquidity below all this area for the daily time frame. So let's see, as price opens for the week, whether we're going to pick liquidity below all these lows we are seeing, all-time lows. Then we drop down to the 1 hour time frame and see what is happening. The most recent data on the 1 hour time frame. Okay, so this is the most recent data we have seen on the 1 hour time frame. A break of structure, price is repricing into an internal range, liquidity reached out to this bearish order block. We can see price has reached out to that bearish order block, and we are bearish on GBPUSD. We can clearly see, except if market does otherwise. We are looking at this, and then we are expecting to pick liquidity, all these areas where the areas are actually marked, this area, this area, this area. On the daily time frame, we're expecting price to pick liquidity below these relative equal lows also. So this is all about the quick top-down analysis on the dollar and GBPUSD. You can do it on other currencies that have a direct relationship with the dollar and see exactly what may unfold for the week. So this is all about it, guys. If you have any question, let me know in the comments. Thank you guys for watching. See you in another video.